Question number 2 in the June 2024 exam paper in the subject Basic Finance required students to do 2 things. Number 1, to prepare a statement of profit or loss, and number 2, to prepare a statement of financial position. Number 1, a student was required to prepare a statement of profit or loss, and number 2, a student was required to prepare a statement of financial position. In this video, I'm going to show you how a student could have attempted the first part, which is that of preparing a statement of profit or loss. The information we're going to use is the information that was provided on the exam, and I have included it in the description of this video on my YouTube channel, Captain 37. My YouTube channel is called Captain 37. The 3 and the 7 are numbers, Captain 37. I invite you to subscribe to my YouTube channel, which is Captain 37. I also invite you to like and follow my Facebook page, Marketing Study in Zambia. Let's get into this question. So we are dealing with an account for Twalumba, and so we are going to clearly indicate that it is for Twalumba. And what is it that we're doing? We are preparing a statement of profit or loss for the year ended 31st December, get the spelling for December correct, December 2024. Nope, it is 2023. So the account is Twalumba, and what we're doing is we're preparing the statement of profit or loss for the year ended 31st December 2023. So we are just going to clearly indicate here that we're dealing with kwacha, and also here that we're dealing with kwacha. Yeah, actually, let me move this one here. Yeah. And what do we start with? We start with sales. We are told that the sales figure was 107,400. 107,400. And we are given from the trial balance that there was sales returns. What does that mean? It means that you have sold out some products, and for some reason the persons who you sold to returned some of those particular products. It could have been that the quality was compromised, the color was the incorrect one. It could be for whatever reason. So what we're going to do is we are going to less sales returns. Less sales returns, and the sales returns value we were told was 2,400. 2,400. What does this give us? When we subtract 2,400 from 107,400, what does it give us? So what we're going to do is we're going to bring in the calculator, and you are allowed the calculator on the exam. It is 107,400 minus 2,400. What does this give us? It gives us 105,000. And so I'm going to write that here. 105,000. 105,000. So this is a true reflection of our sales. We sold out products. For some reason, some of the products that we sold of a value of 2,400 were returned. So this is what we get. We then continue and take into consideration the cost of sales. The cost of sales. And the cost of sales comprises of a number of variables. One of them is purchases. Purchases. We are told that purchases, we made purchases of how much? Of the value 33,900, 33,900. Our purchases value was 33,900. That's fine, and we add it here. We are equally told that they were purchase returns. So meaning we bought some things, but for some reason, maybe the quality may not be what we expected. The color may be incorrect. The sizes may be the incorrect ones. So we send some of the things that we purchased back. So then we are going to less purchase returns. We are going to less purchase returns. And the value for purchase returns is what? The value for purchase returns is 4500. 4500. What else? We need to add the opening stock or opening inventory. The opening inventory, we've been told, is of how much? The opening inventory is 7,600. You will find all this information in the trial balance that's given. So information is provided in the form of a trial balance from which students then are expected to prepare the statement of profit or loss. So don't worry about that part. The information is given. Then what we're going to do is we're going to less closing inventory. And the closing inventory we were given, is how much? 9,600. 9,600. We then put all these together and we're going to put them here. When we add all these together and we put them here, what does it give us? So since I'm using Excel, I'll just use a formula. Sum, we add all these together. It gives us 27,400. 27,400. That's what it gives us. Now, we need to subtract this 27,400 from this 105,000. And that's going to give us the gross profit. It is going to give us the gross profit. So, what do we get when we subtract this particular amount from this one? Again, I'm going to use a formula. Basically, I'm going to say this, take away this. What does it give us? It gives us 77,600. 77,600. And this is the gross profit. After calculating the gross profit, we need to proceed and take into consideration expenses. Expenses. And what expenses were incurred by Twalumba? What expenses were incurred by Twalumba? There was rent and rates. There was rent and rates. And how much for this? It was 5,500. 5,500. There was also insurance. Insurance of machinery. How much was the insurance for the machinery? It was 2,800. Great. What else? There was general expenses. General expenses. Like that. How much for the general expenses? For the general expenses, we are told it was 2,300. What else? There was wages and salaries. Wages and salaries. Okay. Wages and salaries, how much? Wages and salaries, it was 30,300. 30,300. Okay. What else? Just these. These are the expenses that are communicated in the trial balance. These are the expenses that are communicated in the trial balance. So from the trial balance, this is the information that we have. From the trial balance, this is the information that we have. However, you will notice that additional information is given. Additional information is given. One of the pieces of information, number one, the additional information that was given is that of inventory. And we've already taken note of that, which is the inventory that we have included here. So we'll leave that and go to number two. Number two, we are told that the rent prepaid at 31st December 2023 was 1,200. The rent prepaid. Rent prepaid. So there was rent prepaid. And when you are dealing with the rent prepaid, always subtract it. Always subtract the rent prepaid. 1,200. That's just a principle. Always subtract it. So we have dealt with number 2 of the additional information, that the rent prepaid at 31st December 2023 was 1,200. The other information that we have been given is that wages and salaries accrued at 31st December 2023. So there was wages and salaries. Wages and salaries, it's right over there. Wages and salaries. Okay, let me just move them. Wages and salaries accrued. Accrued simply means vienda vipaki lako, isn't it? So it means that you add accruals. Okay, whenever you're dealing with accruals, you add them. And so it was accruals of how much? Accruals of 3,200. 3,200. Great. Then the fourth piece of information that we were given, and this information is available in this particular video in the description on my YouTube channel, Captain 37. We are told that there is furniture and fittings which depreciates at 25% on a straight line basis. There is depreciation of furniture and fittings at the rate of 25%. At the rate of 25%. So we are going to clearly indicate here that there is depreciation that we're dealing with. Depreciation of what? Depreciation, let's do this. We'll say furniture, because that is what it is. Furniture and fittings. Furniture and fittings. Let me just create some space here so that it is decently presented. All right. And how much is the value? What is the depreciation? We are simply told that the depreciation is 25%. We are told that the depreciation is 25%. So 25% of what? That's the question. 25% of what? Is 25% of the cost of furniture and fittings. 25% of the cost of furniture and fittings. And in the trial balance, we are told what the cost of the furniture and fittings are. The cost for the furniture and fittings is 38,500. 38,500. So we need to find 25% of the 38,500. So let's just get a calculator. It's right over here. It's 25%, which is basically, like you already know, 25 divided by 100. That's what we get, 0.25. This 0.25 multiplied by the 38,500. And what does that give us? It gives us 9,625. 9,625, which is what is going to be the value we put here. 9,625. 9,625. Then there's also depreciation. There is depreciation of what? There is depreciation of office equipment. Office equipment. What's the percentage? 10%. Of what? 10% of the cost of the office equipment. And what is the cost of the office equipment? The cost of the office equipment is 33,000. 33,000. And this office equipment depreciates at what percent? It depreciates at 10%. So we'll get a calculator and we're going to calculate 10% of 33,000 like this. What do we get? 3,300. 3,300. And that's what we're going to write here. 3,300. 3,300. Is that it? Maybe, maybe not. There's possibly one variable that we need to include, and I need you to take that into consideration. So I will deliberately leave this line here so that we include that one should there be need to include the variable I am talking about. I'm not going to mention it here. I'm going to mention it in the next video. What we need to do at this particular point is sum up all these. Okay, the sum of all these is what we're going to put right over here. Okay, or we can put it right over here. We can call it total expenses. Okay, we can call it total expenses. All right, so let me just move this here so it just looks more presentable. Total expenses, we can put that right over here. Oh, right over here is going to be just the sum of all these put together. So since I'm using Excel, I'm just going to use a formula, get all these, and that's what they give us. When we add all these, it gives me 55,825. 55,825. 55,825. This amount, these total expenses are subtracted from the gross profit. They are subtracted from the gross profit. So I'll come right over here and I'm simply going to say this amount, take away this amount. What does it give me? It gives me 21,775. What is this? This is our net profit. This is the net profit. Yes. Not our net profit. It's Twalumba's net profit. It is Twalumba's net profit. This is the amount. 21,775. Now, about that extra variable I made mention of here, the extra variable I made mention of here, I'll talk about it in the next video. And I will tell you whether a student needed to have added it or needed not to have added it. So the net profit we have found here may change. I invite you to subscribe to my YouTube channel, Captain37, and to follow my Facebook page and like my Facebook page, Marketing Study in Zambia. Goodbye.